All right, today we're going to take a deep dive into the PLAZM protocol's blueprint for a bear market. We're going to analyze exactly how this thing is designed to work on day 189 of its life.
But first, you know the drill. We have to get the disclaimer out of the way. This is all for educational purposes. It is not financial advice. Crypto is a high-risk game, so please always do your own research.
Okay, let's jump right in with a puzzle. We're seeing some green shoots in the market, right? Prices are bouncing back a bit. So why on earth is sentiment still completely in the gutter? What is going on with this disconnect?
And here it is, plain as day. The fear and greed index is way down at 13. I mean, that is extreme fear. But look at the price action. ETH is up, Bitcoin is up. This happens because sentiment, how people feel, always, and I mean always, lags behind what the price is actually doing. It really brings to mind that classic Warren Buffett line, doesn't it? Be fearful when others are greedy and greedy when others are fearful. Now, for most people, this is just good advice, a buy signal. But for a protocol like PLAZM, this isn't just an opportunity. It's actually a structural advantage that's baked right into its DNA. So here's our game plan. We're going to unpack how PLAZM is built for this. We'll start with this fear paradox, then we'll get into the mechanics, the autonomous yield engine, the anti-fragile vault, what I'm calling the convergence clock, and the conviction filter. And then we'll tie it all together with the bottom line. Everything really kicks off with the autonomous yield engine. Think of it as a machine that is literally designed to ignore human fear. Okay, now this is probably the most critical thing to understand about PLAZM. The buying pressure doesn't depend on you or me waking up and deciding to buy. Nope, it's totally automated. It all starts with bonds that generate a steady yield in USDC. That yield then automatically funds the protocol's own buy programs, which in turn deploy those funds to burn, build, and grow the entire system. It's a closed loop. And hey, this isn't just a theory on a whiteboard. The protocol is cranking out $396 a day in yield. And that number is the same whether the fear and greed index is at 13, like it is now, or at 83. The yield engine simply doesn't care about human emotion. So think about what this means. While human buyers are on the sidelines, totally paralyzed by fear, the protocol itself just keeps on buying every single day. In a weird way, every day of extreme fear just gives the protocol's own programs a clear field to operate without any competition.
And all this automated buying leads to our next point, what we can call the anti-fragile vault. It's a treasury that is actually growing against the market's gravitational pull.
Now check this out. This is one of the most powerful anti-fragile signals in the data. The vault's core ETH holdings are going up. It moved from about 200.7 ETH yesterday to over 201.3 today. While everyone else has seen capital flee, PLAZM's vault is quietly getting bigger. So how is that possible? Well, it's because the vault is funded by bond purchases. That's locked capital, not flighty liquid assets. When someone buys a bond, that ETH goes into the vault and it stays there. It doesn't get scared and panic sell. Right now, the total value of assets in that vault is worth over $433,000. Okay, hold that number in your head for a second. $433,000. Now compare it to this one. The total market cap of the entire supply of PLAZM tokens is just under $200,000.
Let's just be really clear about what that means.
The vaults, the actual assets backing the protocol, is worth more than double the protocol's entire market cap. Every single token is fundamentally backed by more than 2 times its current price. It's a paradox, right? The low token prices, driven by fear, actually make this fundamental backing argument even stronger. This all leads us to our next idea, something we can call the convergence clock. It's basically a mathematical countdown that couldn't care less about market fear.
The protocol's founder put out a very bold, very mathematical claim. They said, once daily emissions drop below daily buy and burn, it becomes mathematically impossible for price to decline sustainably. This is the whole long-term thesis right here.
And you can see that clock ticking. We're at day 189. The emissions are decaying every single day by 0.08%. And when we look ahead, the radar is totally clear for the next 80 days. The next scheduled release is a tiny 59 tokens. So the supply side of the equation is getting tighter and tighter. Meanwhile, that buy and burn mechanism just keeps chugging along, deploying around $330 a day, like clockwork. And here's the twist. The lower the token price goes, the more tokens get permanently burned for every dollar the protocol spends. So, in a very strange way, fear actually makes the burn more powerful. Now, this kind of market pressure also creates something called the conviction filter. It really makes you ask the question, after the storm passes, who's actually left standing? The theory goes that these long bear markets shake out all the short-term speculators, and you're left with a much stronger base of long-term holders. And you can already see this happening. 18% of all plasm that ever existed has been permanently burned, gone. Another 14% is staked. You add that up, and you're looking at nearly a third of the supply that is completely locked away from immediate selling pressure.
So after all that, what is the bottom line? Well, on day 189, the PLAZM protocol isn't just surviving the fear, it's performing exactly the way it was designed to.
Let's just run through the system health check. Is the protocol operational? Check. Is the vault growing? Check. Is the buy and burn deploying every day? Check. Are the compounding mechanisms accumulating assets at a discount? Yep, check. All systems are green.
You see, for a protocol like this, one that's driven by yield and buys automatically, extreme fear isn't a threat. It's a slow-motion gift. The system's answer to the bear market is already built in. So the real question isn't about the protocol at all. The real question is for you. Are you positioned to benefit when all this fear finally goes away?
And just to wrap up one last time, please remember this has all been for educational purposes. It's not financial advice. It's also possible the host holds positions in some of the assets we talked about. Always, always talk to a qualified professional before you make any investment decisions. Thanks for tuning in.